request Ashish Chauhan, the Chief Executive Officer of the National Stock Exchange of India, to come up. Ashish ji, namaskar, welcome. It's always a difficult act after such a session to do a business session, but I'm inspired by this session before us, that not only has Pakistan not won in hockey, it is being beaten completely in cricket. It has lost its path and way in squash. India's economy has left Pakistan's economy behind many, many decades ago. And it took the Pakistani dictator there, he's virtually a dictator, to now say that we are a dump truck which will try and hit India's shiny Mercedes. And the person with me here represents one of the largest, most important national institutions, which is very, very important for India's economy, for wealth creation, for the welfare and security of hundreds of millions of Indians. So, Ashish bhai, thank you very much for being here today. I have you here on a day when pharmaceutical stocks were deep in the red today because of one more tariff tantrum by President Trump. Indian markets have gone through many, many deep cyclical downturns. Is the Trump tariff truck a significant risk to India's market and economy?
No, in a way, the way I look at it is the geopolitical framework or geopolitics eats economics for breakfast. So you need to be worried about geopolitics. You need to be thinking about it. And broadly, in addition to technology, which is the main force which propels the world forward, the geopolitics is a very important force. And today, we have come to a stage that it's not only India. The entire world has to rethink about what was normal and now what is the new normal, or what will be the new normal. We are just in a transition phase where too many earthquakes would happen. The entire world, which was sort of in a very cozy, reasonable equilibrium, is slowly turning into disequilibrium. But it's not today that it has happened. It was like what I call slow-moving train wreck, which was going on for last 80 years. And it has brought us here, where now we suddenly think, no, it's happened today. No. It's even Mr. Trump, if he had not come, somebody else would have come, probably slightly nicer behaving. But outcomes would have been very similar. Why? Is because post-World War II, there was a situation where the World War was between European powers, fought by Indians, but won by Americans. And after winning, Americans caught all the Europeans, put them into a place called Bretton Woods, and said that now we will create a new world order in economics. Of course, in the rest of the world, they created the new framework of the reserve currency, which used to be British pound sterling. Post-World War II, it became US dollars. But they created the World Bank and IMF, that when you need to borrow, you borrow from the World Bank, and after that, the IMF will give you furthermore by wanting you to do tightening, and then the central banks, and then later on the other banks. And so entire world financial system came out of the 1945 or so, and then newer framework of United Nations and WTO and WHO and UNICEF and everything started with U and W came about. And it was an up-and-coming country in 1945. And they were becoming very rich due to science, technology, import of people. The smartest people in the world were going there. They had more resources, and then it went on. And somewhere around 1972, there was, in that range, there used to be huge inflation because of the oil prices going up due to OPEC.
Right.
And 15th August 1972, I think that was the day when we were celebrating our Indian Independence Day. Richard Nixon woke up on the wrong side of bed, and he said, there is going to be no backing to US dollars on gold. And from that day, it became cryptocurrency. Now we call these things cryptocurrency. But the rest of the world also started using the same framework of no backing, just issuing currencies. It brought up a huge amount of inflation, other things. But broadly speaking, the country which was the richest in the world, it was allowing other people to also create at least some semblance of regulations, trying to project that it's also following those rule-based, whatever rules were there. It was only for those guys, Europe and US. We were always on the sidelines. But in that context, we were never important to them, especially as India. But somewhere on the line today, after so many 80 years, that country is now receding from the world because what was rich suddenly has figured that we have become poor, and what they used to give to everyone free, at least in their mind, now they started asking back something, and that's where the world thinks it was their right to give it and our right to take it. Now,
that has changed.
That's changed, and that what I call shift of tectonic plates is going to change the world in a significant way going forward.
So what changes for Indian investors? Because you spoke about new normal. What is the new normal for Indian investors? Because we have seen in 2025, like it or not, unfortunately, India has been the worst performing market so far this year. What is the new normal?
Again, the way you look at it is in the same framework. After 1988, Berlin Wall fell, and then there was a single polarity, single large decision-making country, which was US. Today, in 2025, there are at least 4 blocks. US is, of course, there. It's important even now. Europe, again, it's a receding place, but still important to the world. China and India. So India has become basically a party or a sort of a country which counts. We were not there on the table before. We were not even in the stadium before. Today, we are on the front table, right? So that is where, for me, the new normal is that we have to get used to being important. And we have to also, other people will also have to become used to seeing India as important, right? And so that is, for me, the new normal that is going to happen. The earthquakes which are going to happen over the next 2, 3, 5 years are going to be many. But broadly speaking, why India counts today more than ever before is, one, because of the demographics.
Right.
You are the only young country which is large and which is also technology oriented. You look at Japan, it's become old. China has suddenly become old. China, by 2100, as per estimates, will have half the population of India in year 2100. They are actually losing people now each year, and it's going to accelerate so much that China is now going to become half of our size in the next 70 years. And then comes India, which is going to remain young for next 40, 50 years. You have 2 young countries next door, that is Pakistan and Bangladesh, but they want to go back. They don't want to go forward, right? So that's where the young demographics can also become a problem if you want to go back, because then you will go back very fast.
Right.
And then you have Africa, which is still not figured out how to manage itself well. Europe has become old, and America is going to become old very soon, because this year, in year 25, they're going to have less number of people staying in America compared to year 24, because a lot of people they are throwing out, and it's again an old country actually. And that's where you see the country which is young is India, which is large, 17% of world population. And then it's technology oriented. The largest change that happens, the wealth actually shifts from countries which can't adapt to technology to countries which can adapt to technology. And who can learn newer technologies? The young demographics. Old people, old societies don't have that kind of demand, but they don't also want to learn newer technologies. That's where India, being the technology-oriented country, one of the largest young population, and also overall total population is 17% of world population, you are going to have a tremendous growth coming out of just the demographics and technology. The third part is demand. That old countries don't even have demand, because old people don't demand except the healthcare. And that's, again, increasing their costs. That's increasing the fiscal deficits of those countries, especially Europe, US, Canada, and all.
Massive burden.
Right, and that's actually going to put their creditworthiness in doubt going forward. Ours is a sort of a strong demand, strong demographic, strong technology country. We are going to have our ability to increase the taxes because of just the growth side.
So you seem to be suggesting that in the medium term, this is the new normal and demand and our young demographics will make a change. Since we came into this session from a hockey session, Indian hockey suffered after AstroTurf was introduced. The Indian economy and the markets are also facing a bit of a challenge on account of Trump changing the turf, changing the rules of the game of the global trade order. But very importantly, foreign institution investors, foreign money used to drive the Indian markets. I don't know how many of you know, now that has flipped. India's stock market has become a Atmanirbhar stock market. That is both good, it's an opportunity, and there is perhaps some element of risk. Everybody invests in the market now. People who don't think they invest are also, because your pension fund is also going there, your mutual fund is also going there. So as the head of the institution that is responsible for delivering one of the most robust market infrastructures in the world, is there any risk that we should be worried about, just like the AstroTurf change that happened many years ago and impacted Indian hockey very negatively?
Yes, I mean, you should always be paranoid. See, for me, every second counts, every microsecond counts. We give you response time in microseconds. A second has a million or a 10 lakh microseconds. And now in some markets, we give you a response in nanoseconds, which is every second has a billion nanoseconds. They give you response in 1/1000th of a second and stuff like that. But broadly, you need to be paranoid, especially people who are worried about how to create that infrastructure, how to create a railway on which so many wagons have to, so many trains have to pass. And you need to continue to maintain, manage. Some days you have to increase that size, the scale of that network. And that's what India needs to continue to be paranoid about its relationship with the rest of the world, but also what it does with the technology orientation it has got. Because the framework I have in mind is that over a period, the new technologies, new experiences create more wealth than the past framework. To give you a slightly sort of an understanding of how I think, is that in the olden days, people who had more goats and cows, heads, were the richest people. And then came agriculture. So people who had the larger farms were the rich people. And then came the industries, the factories. People who had more factories, they became the rich people. Because the newer things were creating more wealth than the previous things, right? And so today, a person might have 100,000 goats and he's still not considered that rich vis-a-vis a person having...
You need 100,000 shares to be considered wealthy?
Yes. So, and for me, in future, more people who are able to produce the digital wealth, experiences, that wealth is going to be much larger than the physical wealth. And that's where, how do you create that wealth going forward? And another framework which I have is, in the same logic, you required a lot of money to create more money, a lot of capital to create more capital. That's why it's called capitalism. Before Karl Marx came...
But is that applicable to India's traders? Because much of our markets are driven by sort of a day trader approach, and there is, of course, a regulatory debate happening on it. But are they just taking too many risks, Mr. Chauhan?
No, in some ways, let me complete that thought process on capitalism, that you had to put in more capital to create more capital, and India was capital starved. We did not have much money, so not many of us aspired to become entrepreneurs. Today, with changes in technology coming so fast and waves of technology coming fast, it has come to a stage where you require very little money to create new business, and that business can actually make huge amounts, like we have seen with Nandan Nilekani, Narayan Murthy creating billions out of nowhere by not putting too much money. And then came many waves of people, and last were all the Swiggy and Zomato boys who became billionaires, because it's not that they had a lot of money to put in. Little money, a lot of hard work, a lot of brains, a lot of exposure, and you can make more money, right? And for me, on the same answer to your question, that I would suggest all the day traders might like to become entrepreneurs and do something positive and productive, because the day trading is clearly not productive. It is going to lose money for everyone. And that is true with derivatives also. If you are not capable to understand derivatives, or do not have the ability to handle those shocks which can come with the losses, you rather stay away from that activity instead of going into it whole hog, right? So for me, the day trading, if you're expert, if you have ability to do things, yes. But otherwise, it's not for everyone. And that's why sometimes I say, on television also you say that I have bought in the morning and then, sir, can I sell at what time, 320 or 325? Or I have to do this stop loss. For me, do something productive.
So these are sane words of advice, and there is something else that is happening in the market. Just yesterday, there was data that was put out, 120 million unique investor accounts. These are new ones. The total is perhaps closer to 270 million if you look at that. So, and out of these 120 million, every 1 in 4 is a woman. 99.7% of India's PIN codes have investors present in them, and the National Stock Exchange has the infrastructure and the ability to bring them into the financial markets. How big can this number of investors in India become? Because I'm linking it to the previous question about Atmanirbhar stock markets.
Today, if you look at this 12 crore investors, they are unique investors, different PAN numbers. We have totally 23.5 crore accounts, 12 crore unique investors. They are in all PIN codes in India except 28 PIN codes. And most of those PIN codes where I don't have investors are in airports, where you can't stay full time, I can't do KYC, right? So effectively, entire India, the remotest part, I have people in Leh, Ladakh, the remotest part of Ladakh. I have people in Andaman Nicobar. I have people in Arunachal Pradesh. They invest their hard-earned money, that 1,000 rupees, that 2,000 rupees. She is never going to visit a person sitting in Arunachal Pradesh, putting her 1,000 rupees into a plant, a manufacturing plant-related company in Salem. She's never going to visit that place. But she has a complete confidence that that business will make money, and if it does, that portion of the profit which belongs to her will be given to her. It's such a great leap of faith of an Indian citizen into another Indian citizen who is an entrepreneur, right? For me, it's a great leap of faith. Many countries do not have our markets. I can tell you that. We have $3,000 per capita income. There is no similar market with this size or this intensity. At $6,000, there is no similar market. At $12,000, there is no such market. At $24,000, there is one market which is our size and scale, which is called China, which is in China, when prices go down, government has to go and buy. In our markets, government will never think of us as their responsibility, right? It has become Swayambhu market. Our 12 crore people, and what we have earned, many times I said in last 78 years of our independence, what have we earned as a nation? Of course, we have parliament, we have judiciary, we have regulators like SEBI, we have exchanges, but our entrepreneurs have earned the trust of our investors. 25% of India's households today, we have 9 crore households directly investing into stocks. 25% of India's households are now investing in stocks. They're telling you that 25% of Indians have become middle class. And it's such a great situation that today Germany, the entire market size is much lower, probably less than 30-40% of our size. UK is now 50% or less compared to our size. Singapore is running at 30 years less, 30 years lowest in terms of number of listed companies. Japan, Australia, you see everywhere except India and US. You don't have new companies coming to the markets. You don't have new investors coming to the market. And that's where when we ask ourselves that this is actually against economic theory, that how come poor people or low per capita income country like India has so many people investing in other places. And that's a miracle of modern technology, because people are able to trade through mobile, but also because the human trust into other humans doing business, becoming their partners, is so great. This is the wealth of trust. 1/3 of India's wealth, $5.2 trillion, is now represented by NSE. 1/3 of India's wealth is a wealth of trust. And that is, for me, what will propel India forward. is that the countries or societies which trust each other will go up. The societies which do not have that contract amongst citizens are going to go down. And that's where the foreigners, they have ability to invest into many countries. And naturally, they predict about things. Sometimes they are wrong, sometimes they are right. But in some ways, they've gone through many such iterations. They take out the money, they take in the money. But today, every year, large portion of the savings which India used to do earlier also, but today, just to give you a perspective, on a $4.2 trillion of GDP, we save around 30%, which is $1.2 trillion. It is reasonably large enough for us to fund ourselves.
So in 5 years from now, what will the size of our markets be? How many people will be investing in the stock market?
Okay, so usually my job is to run the systems. So I sort of prepare for the worst case, but I give you last 11 years numbers because when Mr. Modi took over, I have some memory of those numbers. When he took over, India had 1.67 crore investors 11 years back, 2014. Today, after 11 years, India has now 12 crore unique investors, 7 times more. India in 2014, around May 2014, had totally market capitalization, that is the wealth represented by stock exchange, was 67 lakh crore. Today, it's 460 lakh crore, almost 7 times. Today, on a good day, I will do 2,000 crore orders in 6 hours and 15 minutes. Comparatively, UPI does 2,000 crore transactions in a month of 24 hours. I do it in 6 hours only. But compared to the rest of the world, on many days, NSE accounts for more than 50% of all orders in the world. We have become that large, although per transaction our values are small, and that's where we still don't count. But if you just extrapolate, because in some ways, last 30 years, 35 years, there are many ups and downs. We have seen worse periods, right? Today, I mean, we have seen, I started working on NSE in 92. 98, we recall the Asian financial crisis. Then we had the nuclear sort of test, and then we had sanctions. Then came 2000, e-commerce and Y2K stuff. Then 2001, the collapse of e-commerce bubble. Then 2007-8 or 2008-9 global financial crisis, and many such cycles which are worse than today. And in that 32, 33 years, India has given you average 6.5% returns. If you think with all the technology and other things, if India is going to do at least 6.5 or probably 7, 8% in next 25, 30 years, Nifty, when it's actually the base date was November 3, 1995. On that day when I created Nifty, I had based it at 1,000. It's 25,000 today. In literally 30 years, it's given you 25 times return. But if you take the...
How many years to 50,000?
See, that's why I'm giving you that perspective, that in 30 years, from 1,000 to 25,000, but if you take the dividends, it would be close to 30,000, right?
Okay.
Now, if you take, again, next 30 years, and assume that at least we'll do 6.5%, guys. Even at that rate, you will go from 30,000 multiplied by 30, right? Your ambitions are too little.
Okay. So, tariffs or no tariffs, the message from this session is very clear. We will continue to grow. There might be cyclicity, but as the Indian hockey vice captain, that champion player showed us, for others, it will only be down. For India, it will only be up. Ashish Chauhan, thank you very much for...
Thank you.